Hello, welcome to my YouTube channel. If you like the video, please press the like button and do subscribe my channel. My name is Arundhati Shom. Initially, I started my journey as a tutor. I used to do tutoring up to masters, MBA, BBA, and then I used to work in online platform as a teacher. Then I started my career as a guest faculty in INFD, which is a leading fashion brand in India. Then after INFD, I started my career with IHN, which is a leading college in hotel industry. And they have other courses like hospital management and tourism management and hospitality management up to masters. So for the last 7 years, I have been to teaching profession, teaching different professionals like doctors, engineers, accountants, statisticians, and everyone. And I used to generally teach accountancy, economics, finance part. So everyone teaches accounts in their own way, and with the 7 year of experience, interactions with different professionals, teaching in different professional courses like fashion, hotel, hospital, and all that. So I have my own interpretation of accountancy. I have my own kind of understanding of accountancy. So today I'm going to share few of them in my own way. Maybe it not be a very exactly relate to the books people have written. I mean, with due respect, they are amazing authors, but with my kind of experience, with my kind of interactions with different professional students from different parts, different universities, different professional courses and everything, I have my kind of understanding. So I first start with very basic concepts of accounts, the need of accounts, the importance of accounts and all. So this was a little intro, maybe a bit dragging, whatever, let's start. So it's like that if we try to understand the definition of business. So business, we mean any kind of exchange of services, any kind of selling of products. Either you make goods, either you make services, either you provide services to your clients, and with that you obviously when you want to sell the goods or service, you want something in exchange. And in this system, or in this economic system, I think money is the best thing that a businessman can want. So from the very basic, if we try to understand business, it's selling of goods and services for the exchange of money. And obviously the businessman will take the risk, will take all the endeavors, all the pain, all the risk for doing business, the owners of the business, or the very key people, the managing director or managers or anyone. And what they want to make profit, they want to earn. Okay, so if we understand business, we can say that in a business there's always too much of transactions, money coming in, money going out. First, if we want to start a business, we need capital. Without capital, we cannot start a business. It's a very, very source, a very root of a business, the capital. And then we have to arrange capital. We may take loan. If it's a huge business, they can issue stocks, issue shares, loan from the bank. They can issue bond, debenture. They can save and invest in the business. Generally, people do take loan. They do not put in their own money. So this is how arrange for the capital. Then the plan, how to produce, what to produce, who are the clients, who are the targeted audience, who are the targeted clients. The businessmen think. Then they may put a factory, they design the factory, they put labor into it, they produce or they render service, they put an office. So it's a huge lot of money involved, a huge lot of activities involved, huge lot of risk involved. Then after production, you need to distribute them to your clients or to your customers or to your vendors, your dealers, whoever, wholesalers. So there's a huge lot of things involved. If you're a wholesaler, you need to buy and again need to sell to a retailer. The retailer going to sell to a main customer. So lots of activities involved. First, so if I sum up, you need to arrange for capital, you need to plan the business, you need to put an office, you need to put a factory, you need to appoint laborers, you need to appoint machineries, you need to buy machineries, you need to buy furnitures, you need to pay electricity bill, you need to pay taxes, you need to pay for maybe for the insurance of your employees, maybe for canteen expense of your employees, maybe you need to make a restroom for your employees. They need to market, you need to advertise, you need to distribute the goods. So it's a huge lot of dynamism, activities involved. So at the end of the day, the owner wants a good, handsome profit. So if these things the owner is doing, and the whole intention is profit and a handsome money out of the business, do you think if proper records are not maintained of the monetary transactions, if the owner do not know that what money is going out and what money they are earning in terms of sales, if the owner have no idea that the outflow and inflow of the money, do you think the business can stand? I don't think so. I think it's just impossible. So it's very important that this whole dynamism of business, the whole activity of business should be recorded in a common denominator or a common platform called money. How much money is coming in and how much money is going out and how much profit we are making out of it and what can we do with that profit. So this recording of money in a business, then analyzing what's going on, then after the analyzation taking decision that what to do next. If in a business, suppose I'm the owner and I have my business, at the end of the year I can see that I have a loss of 10,000 or I have a profit of 10 lakh or I have a loss of 1 crore or I have a profit of 20 lakh. When I understand my monetary position, after understanding my monetary position, maybe it's a huge profit, maybe it's a huge loss, maybe it's a very minimum profit, very minimum loss. After understanding that where I lie, where I stand in the market, or where I stand among the competitors, or as a producer, or as a service provider, where I stand, after understanding that, I need to take very crucial decision that how to do more good or how to do betterment of my business. So again, if I sum up, I have to do the whole planning, I have to do the whole production, I have to do the whole selling, then I have to earn, I need to compare what are my expenses, what are my income, and then after understanding my expenses, income, my profit and loss, I need to take further decisions that how I'm going to do more better, how I'm going to, put my roots more firm in the ground as a business, so I can really do more growth to the business. I can stand in the economy, I can beat my competitors, I can grow with the year, I can then come diversifying the product, then come proper marketing strategies, proper advertisement. So for all this whole lot of work, recording of transactions, transaction means exchange, monetary, len-den. Len-den is a Hindi word, so len-den, monetary exchange, that is transaction. Recording of the transaction is very, very extremely essential, otherwise it doesn't make sense. So this recording of transaction in a very methodical, in a very scientific way, in a particular pattern, it has a particular pattern, in a particular pattern is called accountancy as a subject. Very briefly, I'm telling what is accountancy. Suppose I'm giving salary to my employees, right? So two things happening. One, that an expense called salary is taking place in my business. Another, due to that expense of salary, there is a outflow of money. I am giving money to the employees. I always do accountancy from the point of view of the business, not from the point of view of the employees, not from the point of view of the clients, but from the point of view of the business. So what is accountancy? First we need to record, then we need to summarize the thing. We need to put everything under perfect headings, perfect columns, everything. Then we need to understand that what is the position of the business. We need to interpret the message we get from accountancy, and then we need to take further decisions. So for major decision making, for accurate decision making, accountancy is very important. So again, getting back that what is accountancy. Suppose I'm paying my electricity bill of the business. Again, there is an expense called electricity, and due to this expense, money is going out. Again, if I'm investing capital, into the business. Firstly, I must tell you, the business is a different entity. The business is different from its owner. The owner is a different personality, and the business is also a different entity or individuality or personality, whatever we call it. So when the owner is investing his own money or capital into the business has a responsibility to give that money back to the owner with a profit. So a capital is always a liability or a responsibility from the point of view of the business towards its owner. So when the owner is investing capital in the business is getting a responsibility of money, and with that there is an inflow of money into the business. If we take another aspect, that suppose there is a sales in the business, so the business is incurring an income. Obviously sales do take place daily or maybe 10 times a day, so it's a very regular income the business is having. and with that there is an inflow of money coming into the business. So what we're understanding from these kind of arguments or elaborations, that there is one event or transaction, and that transaction has two parts. While recording a transaction, while recording an exchange of monetary event, I'll take one transaction at a time and I will analyze that transaction into two different parts. Always while recording. This is a very basic method, that take one transaction and analyze it into two different parts, and these two different parts is called debit and credit. Again I'm telling, these two different parts, one part is called debit, another part is called credit. So the debit credit has all the dynamics and all the fun. So there are normally 6 rules for this debit and credit, and I would love to elaborate those rules. So the thing is, debit and credit has 6 rules. One we call liabilities, another we call assets, another we call expense, another we called income. So if we take the liabilities, it's generally the responsibility of the business. Assets means the property of the business. Expenses means the daily expenses, the recurring expenses. Income means the daily kind of income, the income which are happening daily in the business. So responsibility, we can say it's a loan the business take from the bank, the capital. Okay. Property can say the building or the office building, the machinery, the furnitures, the cash, money in the bank. Daily expenses, we can say salary, not daily but regular expenses, regular wages of workers, electricity, then discounts, commission paid, daily incomes can be sales. From the day, what daily I can shift to regular income. Regular income coming in, income from commission, income from bank interest. If we put money in bank and we are getting interest. Mainly sales is the basic income of a business. Income from discount received. Okay. So we can really, divide into these 4 aspects of business. You can really divide into these 4 aspects of business. Okay. If we buy any property for the business or the company, we say we debit it. Suppose we buy furniture for the office of a business, we will say the furniture should be debited. Suppose we are selling any plot or any building, office building of the business, we should say that the building should be credited. Debit stands for DR, credit stands for CR. In terms of liability, if we take any loan from the bank, we will say loan account credited. If we paid that loan from the bank, we will say loan account debited. Suppose there are sales, we will say sales is credited. Any income we credit. And suppose there are expenses like electricity bill or salary or telephone charges or discount we have to give to our vendors, so we'll say that expense is that particular name of the expense we'll take, and we'll say it's debited. Now we learnt the rule of debit and credit in a very simple way. So I'll take one transaction or one exchange, which is salary paid to employees. The business paid salary to its employees. While recording that transaction, what we do, we will write that salary account debited to bank account, which means that the salary we learned, any expense is debited, so salary account is debited to bank account. Bank is an asset. So when we are paying salary to our employees, the bank account in the name of the business, the money in the bank account is decreasing. So the asset is decreasing. And while any asset is decreasing, we will credit that asset. And in this, while recording this transaction, we won't write credit, but instead, and we'll in the mouth we'll say credit, but we'll write TO2. So salary account debit to bank account means salary account debited and bank account credited. Again, bank account credited means the assets are decreasing, and salary debited means any regular expenses is taking place. So this writing is particularly called journal. The journal has a particular format. When we write these journals, we write in a particular long table. I'll definitely show you in my next video how to do the formatting of a journal, how to understand journal. This video I don't want to make it too long, otherwise too long things get too boring. So here I'll make you understand that if we take a transaction and if we record it, the first recording we call it a journal, and in a journal we analyze the transaction into debit and credit. According to the rule of debit and credit, we debit something, we credit some another thing. Here we have debited salary and we have credited the bank, and we have our explanation written, we have our analysis. And in this way, in business, all the monetary transactions are recorded, all the chronologically, that is day wise, and this is called the book of primary entry, and we call each of the recording journal entries. These journal entries are very much the base of the accountancy subject, and these are essentially very important to understand every business. A business cannot stand without journal entry. It is so important. And next we'll definitely continue with with various aspects of journal entries, various dimensions of journal entry. Hope you like the video. Do subscribe, do like the video, do subscribe my channel, and keep watching. Hope you have enjoyed. Maybe your it's a very basic videos on accountancy, and I hope your basic queries, very basic queries on accountancy are fulfilled. we'll elaborate more things, more to come. Till then, take care. Thank you.